I've used this entry model to pass multiple prop firms and get tens of thousands of dollars of payouts. Entries make or break your entire strategy. You can see all the confluences that you want, but at the end of the day, it means nothing without the correct narrative. In today's episode, I'm teaching you how to create and use precise entries into your own strategy. If you haven't watched the previous trading workshops, then I recommend you go back and watching episode 1 through 4. To start this off, you need to find your narrative. By doing that, it's finding your daily bias. I'm going to kind of speed run this through. I've already explained how to do this in one of the previous episodes. We're going to the daily, marking out our previous day highs, previous day lows. Then we're dropping down to the 4-hour. We're marking out any confluences that we can see. Now that we have our 4-hour confluences marked out, we're going down to the 1 hour and we are marking out our confluences. So we have a fair value gap right here that was filled. We have that fair value gap. So we have lows right here. So this low was swept on during the news event. Now we're down to the 30-minute and we're just continuing to mark out confluences. We have more fair value gaps towards the upside. This is a very good sign. So we have a 30-minute fair value gap that has been filled, dropping down to the 15. And here we go. We have data highs. Now that we have all this marked out, we need to find our narrative of the day. So going based off what we have marked out on the charts, where do you think price is going to go? Price is going to retrace to one of these areas, probably not these two, but this 30-minute fair value gap, and continue pumping up, because this is so much bullish structure just going down time frame by time frame. This is adding layers of confidence to our strategy that price wants to continue pushing up. We have a 15-minute fair value gap, we have a 30-minute fair value gap, which is great alignment. We have a 1-hour fair value gap and a 4-hour fair value gap all the way down here, sorry. First, price needs a little bit of retracement, so let's wait till market open. Data highs have been hit. Now we just want to see a retracement to one of this 15-minute or 30-minute fair value gaps with a 5-minute fair value gap down here as well. So let's see what price does. Swept highs, boom, instant displacement towards the downside. Now that we see that, we have a liquidity sweep on the 5-minute. We have a 30-minute fair value gap hit, 15-minute fair value gap hit. Let's see if price starts showing an entry model while respecting these areas. So price hits. You have a fair value gap right here. Now that we see this displacement candle, let's start going over our confluences. Let me get rid of these higher time frame ones because you don't really need them. It looks like a mess. So we have an inverse fair value gap. Liquidity sweep. Then we have another liquidity sweep with a displacement. So that's an order block. We have a fair value gap that turns into an inverse fair value gap. So right here alone, you could enter right off this, legit. We also have a market structure shift right here. Let's run over how many confluences we have right now. We have 1 liquidity sweep, 2 order block right here, 3 inverse fair value gap, 4 market structure shift, 5 fair value gap. Those are 5 layers of confidence that you have just added onto your strategy. You alone can enter right here. Now that we have our confluences laid in, now you just have to enter. You could target a 1 to 2, target next liquidity. We are targeting the next highs. Oh my gosh, look how sexy that is. If you wanted to wait a little longer, which is what I did, because since I was not very confident with this trade, so what I did was I waited for a continuation one. And I was also a little nervous from how choppy price was looking, as you can see right here. Can you freaking blame me? We're using this camera now, sorry. My camera was wigging out, dude. So we got a retracement to the 5-minute fair value gap, and now we're going back down to our 1 minute because we have our narrative. Our narrative is we are looking for buys. We have 5-minute confirmation, and we think price can continue sweeping higher. So price drops down. It respected this little fair value gap, this little rinky dinky one, and now we are waiting for a confirmation. So now we have a new swing, and what we need to see is this this fair value gap get disrespected. Now we have a new swing. We have a fair value gap forward, market structure shift. So let's stack our confluences. We have liquidity swept, confluence 1. We have a market structure shift, confluence 2. We have a fair value gap, confluence 3. And we also have an inverse fair value gap. It's not as solid as the last one, and I entered right after that inverse. I collected myself a quick 1-to-1 for 500 bucks. It's 590. You have to have the balls to enter. That's very important. Thank you for letting me know it's bedtime. Boom. So we're going to run over our confluences real quick one more time, how they are stacked and in the correct narrative. 1, we have a liquidity sweep. We have another liquidity sweep with a displacement candle. So that's an order block. So that's 2 layers of confidence right there. Then what else do you have? You have an inverse fair value gap, because this fair value gap was disrespected. That's adding another layer. What else came after that? We also had a market structure shift, which should have been the deal breaker. That's like, not deal breaker, but deal keeper. So that's confirming the deal. And then you also had a fair value gap. So you enter off that freaking inverse fair value gap, ride that sucker up to the next liquidity. But then what about the fair value gap? I don't care about the fair value gap. We had all the confluences, all the right confirmations to really supply us with the correct narrative that price is going to keep pumping upwards. So we targeted these highs, and then you catch a nice 1, 2, 3. We had a 5-minute retracement, confluence 1. We had a liquidity sweep. We had a market structure shift right here, MSSS. We had a fair value gap. We had a retracement to the fair value gap. We had an inverse fair value gap. You ride that junker, well, 1-to-1, because we are already super high on price. Understanding adding more confluences is actually adding more layers of confidence. I keep saying that the more you see that price is confirming the direction that you want to go with confluences, it is telling you that price wants to go that direction. Confluences are just ways for price to tell you it's liking where it's going, really. When you lose, it's almost all because of lack of information or lack of psychology, and it's probably what's making most of you lose. Understanding this means you're confirming that you are aligning yourself with the correct narrative, and that's the reason why most of you lose. It's because either you're not aligning yourself with the correct narrative, you're not finding enough confluences, you're just jumping off the boat for one confluence, or it's because of your mind games. It's the mentality of money. That feeling of getting money so fast can really be the destruction of you, and that is what we'll talk over in our next video of our psychology video of episode 6 of Trading Workshop. If this really helped you and you want more of this, I have a Discord that will go over my trades, why I'm taking my trades, and my daily bias, what I'm seeing to actually take my trades for. Anyways, I love you guys. God bless. Have a great, amazing day. Make sure to try to do one thing better with yourself every single day. See ya.